They sell us lumber. They have a tremendous tariff. They make it impossible for us to sell lumber or dairy products into Canada, but our numbers are a tiny fraction of that.
Well, the Trump administration is taking aim at a major Canadian export. The U.S. Commerce Department is hiking anti-dumping duties on Canadian softwood lumber to 20.56%.
These settlers built our economy on lumber, literally built our economy on lumber, supplying the British Empire before shifting exports to a growing market in the United States.
This is going to have a huge impact on our industry and certainly on our company. We rely heavily on the U.S. market.
Overnight, Canada's lumber industry was thrown into chaos. The US didn't just tweak trade rules, it slapped a brutal 25% tariff on Canadian softwood, instantly shaking an entire industry. For mill workers, builders, and even first-time home buyers, this wasn't politics on paper. It was a direct hit to their wallets and their futures. But here's the kicker. This trade war isn't only about wood. It's driving up housing costs, threatening jobs, and even tapping into nearly $1 trillion of financial leverage that Canada holds over the US. So why did America risk so much? And how is Canada striking back? Let's get straight into it. For decades, the US and Canada have been locked in what many call the lumber wars. This isn't new. Every few years, the same fight comes back. American mills say Canadian wood is unfairly cheap because of government policies, while Canadians argue their practices are just different, not unfair. And every time it leads to tariffs, lawsuits, tense negotiations, and eventually a fragile peace that never lasts long. But in early 2025, the dispute hit a whole new level. The Trump administration suddenly cranked tariffs up to 25% on Canadian softwood lumber. Now, keep in mind, Canadian lumber was already paying about 15% in various duties from earlier disputes. So stacked together, some shipments were now facing close to a 40% tax. For small Canadian sawmills, that was devastating. In British Columbia, for example, there are hundreds of family-run mills, many operating on thin margins. A sudden 35–40% penalty on lumber headed south. For some, it wasn't just a hit to profits. It was a potential death sentence for their businesses and their workers. But here's the twist. This move didn't just hurt Canada, it also shook up the US lumber industry itself. One of the biggest names in American timber, Weyerhaeuser, reported that its profits had been cut in half within just a few months of the tariffs kicking in. Think about that. A company managing millions of acres of forest land, normally seen as a barometer for the whole industry, suddenly saw its earnings collapse. Why? Because tariffs might protect against cheap imports, but they also disrupt markets. Demand softened, inventories piled up, and costs kept rising. Meanwhile, the Canadian government started quietly reminding the US of something few people think about. Canadian pension funds and investors hold close to $1 trillion in American markets. That's right, Canada has a huge stake in Wall Street. They weren't threatening to pull the plug, but just mentioning that number was a subtle way of saying, we've got leverage too. On the ground, the fallout spread fast. The US housing market, already squeezed by high interest rates, now faced another blow: higher lumber costs. New single-family homes suddenly became thousands of dollars more expensive to build. Industry estimates suggested that by 2027, if tariffs stayed in place, the average home could cost an extra $14,000, purely because of lumber prices. For young families already struggling with high mortgage rates, that's a huge barrier. Builders noticed the shift too. Some paused new projects, worried that volatile lumber prices would wreck their budgets. Houses sat longer on the market. Construction starts slowed down. So here's the irony. Tariffs meant to protect American producers ended up making life harder for American buyers. Of course, supporters of the tariffs argued the pain was temporary. Groups like the US Lumber Coalition insisted that Canadian wood had been sold too cheaply for decades, undercutting American mills. They claimed that if tariffs gave US producers breathing room to ramp up production, eventually supply would stabilize and prices would even out. But critics weren't so sure. They pointed out that lumber was already one of the biggest drivers of rising construction costs, even before this trade war reignited. Adding another layer of tariffs just poured gasoline on the fire. So, how did Canada respond? Ottawa wasn't just going to sit back and take the hit. At first, officials hinted at extreme measures like export quotas, basically limiting how much wood Canada would send south. That was a big deal because Canada had resisted such measures for decades, saying they went against free trade. Just the fact that it was even on the table showed how serious the situation had become. At the same time, Canadian mills started looking elsewhere. Instead of relying so heavily on the US market, they expanded exports to Europe and Asia. In just a year, Canada's share of lumber exports going to the US dropped from 78% to around 68%. That's a massive pivot for an industry so tied to American demand. It wasn't easy. Shipping wood across oceans is expensive and foreign markets have different rules and standards, but it showed Canada was determined to adapt. Meanwhile, in the US, the government doubled down. Not only did it enforce the new tariffs, but it also announced plans to boost domestic logging. Federal officials wanted to increase timber harvests on national forests by about 25%. On paper, that sounded huge. In reality, experts said it would barely move the needle, maybe increasing total supply by less than 1%. And that's if the plan even survived lawsuits from environmental groups, which were already lining up to block it. Still, American sawmills tried to modernize. Many invested in robotics and automation to get more wood out of each log. Some even reopened old facilities in hopes of reviving local jobs. Communities that had seen mills close decades ago started to feel a flicker of hope. But here's where it gets even more interesting. Canadian companies themselves started buying mills in the US. Giants like West Fraser and Canfor invested heavily in states like Georgia and Alabama. Their logic was simple. If shipping lumber south was going to be taxed to death, why not just cut and process the wood inside the US instead? That way they could still serve American buyers without getting slammed by tariffs. In a strange twist, US trade policy ended up encouraging more Canadian ownership of American sawmills. Some saw this as a win. More jobs in the US is always good, but others worried it blurred the line in the trade dispute. After all, if Canadian-owned mills are operating in the US, who exactly are tariffs protecting anymore? As the summer of 2025 dragged on, the standoff hardened. Washington insisted that Canada needed to accept a new deal by August 1st. Canada flatly refused to be pressured. Prime Minister Mark Carney made it clear Canada would only sign an agreement that protected Canadian jobs and communities, even if that meant holding out longer. Behind the scenes, Canadian officials also pointed to that trillion-dollar financial stake as a quiet reminder of their bargaining power. And with new markets opening in Europe and Asia, Canada showed it wouldn't be completely cornered. For the US, the gamble was that tariffs plus domestic production would eventually force Canada's hand. For Canada, the strategy was to endure the pain, diversify exports, and play the long game. So where does this leave us? Right now, it's a stalemate. Both sides are digging in, neither willing to blink first. And while politicians argue, the real costs are falling on everyday people, loggers in Canadian mill towns, American homebuyers watching prices climb, and construction workers facing slower demand. Trade wars aren't just about numbers on a spreadsheet. They're about families, jobs, and the price of basic necessities like housing. The lumber war of 2025 is more than just a fight over wood. It's a test of how two of the world's closest allies handle conflict when national interests collide. It's about whether politics can trump economics or whether common ground can be found before the costs spiral too high. Because at the end of the day, a 2x4 isn't just a piece of wood. It's the frame of a family's home. It's the livelihood of a mill worker, and it's a symbol of how fragile global trade relationships can really be. So what happens next? Will the US and Canada finally strike a new lumber deal under the USMCA? Or will this fight drag on, reshaping industries and driving up costs for years to come? One thing's for sure, both countries have a lot riding on the outcome, and the world is watching closely, If you enjoyed this breakdown and want to stay updated on stories that connect global politics with the prices we all feel in our daily lives, make sure you hit that like button and subscribe to the channel. It helps a lot and it keeps you in the loop for our next deep dive. Because trust me, the lumber war is far from over.